Jesse, fantastic to have you on the show again. You've had a busy few months with Smarter Web, so I always appreciate your time.
Good to be here.
It's been a while since, well, not like a long time, but a little while since we've last spoken. The first thing on my mind is kind of NYC, the unconference, and the investor meetings that you had around that. I'm wondering if you can add, to use your phrase, a little bit of color on that.
It's funny that the Brits seem to find that turn of phrase funny. I guess it's not something you guys use, but not uncommon in American speech. Yeah, a bit of color on New York. Yeah, so we had the conference day. It was a 1-day thing. It was great to be there. Everybody in Bitcoin Treasury Company land, on the operator side was there. So good to catch up with people. Also, sort of got to hear people's thoughts on like what was going on in the market, like what is driving the MNAV compressions. I guess I'll say that coming out of those conversations, it felt to me like, oh, okay, maybe the Jim Chanos trade is happening everywhere to a scale that I hadn't really thought previously, and that's interesting and fine too. It's kind of if for people who aren't familiar, that trade is Jim Chanos has been a bear, a MicroStrategy bear for some time, and I think it comes back to the fundamental misunderstanding, I would say, even among finance folks, that why do these companies trade at a premium to their assets? They should, in the view of Chanos, if the value of this company is based on the commodity that it's holding, it should trade at the value of the commodity, which totally ignores my view, and I think Saylor's view, that these companies are productive assets that are have machinery in place to continue to fundraise and acquire more Bitcoin in ways that are accretive to shareholders, and that's the big gap that I think Wall Street guys are so unfamiliar with. Is it's not possible in their world to accretively fundraise and acquire more or something, but that's what's possible when you're arbitraging fiat.
Yeah, and I guess it's the different delivery of shareholder value, right? So
Yes, yeah, it comes back to that they're so accustomed to the income statement being everything that matters, and then there's this weird financial engineering where you fundraise fiat and you acquire Bitcoin, and Bitcoiners are excited to own an asset that does that and are willing to pay a premium for that, and that breaks the brains of traditional finance guys like Jim Chanos. So his view has been MicroStrategy is overvalued, and the clever trade there, if you're Chanos is known for being a bear and shorting things. It's kind of his whole identity. He's also, side note, underperformed massively over the last 10 years, I think, and has seen the AUM that he controls drop significantly as investors have withdrawn from his fund. So there's also that. But a clever trade here of short strategy, long Bitcoin to hedge out exposure to the underlying commodity. And when hedge funds have, assuming that hedge funds have piled into this trade, they're big enough players that they, I think, have manifested or at least accelerated the MNAV compressions over the last 3 months, probably because they saw an opportunity. There was sort of euphoria about these mechanics, this model 3 months ago. They saw, okay, MetaPlanet's trading at 8 MNAV strategies at 2.5 or whatever it was. We can short the hell out of this, and it worked. And so I think that's been a bigger part of the last 3 months than I realized. I knew it was happening for strategy, and probably for Metaplanet. I didn't know. I still don't know that it's been happening for the smaller ones, but I think that's probably been a part of it.
And so, just to clarify on that, there's a lot to squeeze when you're in euphoria, right? There's
Right.
there's this whole journey to go on, but when you get to the lower levels,
Exactly.
It's harder to squeeze out that last little bit.
Well,
of juice,
yeah,
right?
the whole thesis there is that these things should be trading closer to 1x MNAV, right? That they should be trading at the value of the thing. So, that it worked for the hedge funds for this period of time to squeeze those MNAVs down, but they're kind of out of runway, right? Like if MNAVs are now close to across the sector, pretty close to 1x MNAV, well, there's not much left to squeeze. And if you're in that position, it's probably a good time to close that successful trade and go find the next thing, the next narrative that you can go identify in global markets, the next opportunity. And what that could do, what I think would happen as a result of that, so this may play out over the coming months, is those opportunistic hedge fund bears leave, and they feel very victorious, and the Bitcoin treasury companies that are still in good shape, still healthy, still have their flywheels turning, they continue to run the playbook and run the mechanics and deliver Bitcoin yield. And investors who want Bitcoin yield will drive the price, over the coming months. And I think MNAVs, in theory, then would reinflate a bit. Wouldn't get to that euphoric kind of place anytime soon. But I think that's kind of, coming out of the New York conference, that was a takeaway for me, is that this has been a short-term trade from players who see this as like, an opportunity to make a buck, but they've run out of runway, and that's a great thing, because we can get back to doing what we're here to do, which is deliver Bitcoin yield, as a sector. And we can do that without MNAVs being pressed down by external forces. That's one takeaway I had. And then we can also talk about so that was one day in New York, and then we had 2 other days where Andrew and I were there on the ground, and we met with a couple investment banks, and they set up a series of meetings with institutional investors. So we had one day full and another day full. We talked to a dozen institutional investors at meetings, and those were great. Spoke to a couple coverage analysts that are considering starting coverage on Smarter Web, which is another important good thing for Smarter Web. And all of this was in the context, and we were very clear with all these conversations, that we're sort of starting our institutional outreach beyond the UK. And the first 5 months of growth for Smarter Web was based on UK retail investors, Bitcoin global retail investors, and a small bit of UK institutions. And that part of our next chapter here will be US institutional and global institutional being a part of that. So that was a super productive trip, just in the sheer number of people we got to talk to on the institutional side. And we are excited about the investment bank relationships in particular, especially one of those, and look forward to hopefully cultivating that into the future.
Okay, wow, that sounds pretty exciting. Kind of casting our minds back based off your takeaway from the NYC conference or unconference. Given the last 3 or so months, and the kind of seeming cyclicality that treasuries have, would you do anything differently should another cycle like that occur?
Yeah, it's a good question. It's funny that people ask me like, what happens to Bitcoin treasury companies in a bear market, and I'm like, you've been living in one the last 3 months. Obviously, they mean a Bitcoin bear market, but I think the reality is like this is a stiffer test than a Bitcoin bear market of 60-70% drawdown spread over a year. This has been more pain compressed into a tighter time frame. So, what would we want to do differently next time in the same sort of uh, Bitcoin treasury company MNAV compression bear market? It's a good question. I think what we definitely know is that keeping the flywheel turning has been instrumental for us to differentiate ourselves from other Bitcoin treasury companies. I think it's been a mistake, but maybe not a mistake. Maybe it's that it has revealed uh, the true strength of a lot of Bitcoin treasury companies, that they, in this stiff headwind, have been unable to keep going with the flywheel, the playbook, the mechanics. So that's been something we've done well, and we'd be determined to do that again. Keep things moving, keep raising capital, and also keep communicating frequently, transparently, candidly with investors, because it's painful and it's scary when you go through a sharp drawdown like this. We don't have we don't have a crystal ball, and we don't have all the answers. All we can do is, that's what the market is giving us, right? But what we can do is try work hard every week, to stick to the plan, stick to the playbook, keep raising capital, and explore whatever means necessary to make sure that is done in an accretive way to shareholders, which is the whole point here. And we've done a good job of that, and I think there's probably more opportunities for using some of the levers of like the smarter convert, where you have a conversion premium that ensures that that effectively the transaction occurs at a higher MNAV than what you currently are at. And that's a really cool mechanic that takes a lot of like educating the market that it exists and like that is real. And I think that we were able to do that with Tobam, who's super savvy on Bitcoin and understands these products because they pioneered it with capital B. But would like to, I think that'd be like, for example, a lever that we would want to use more in these kind of conditions in the future. But there's going to be some some legwork to educate the market, such that investors are ready for that. When that time comes in the future. Sure. Some thoughts there.
Sure. And you never know. Zinks and his new group of sovereign investors may be interested in a smarter convert in the future. Which kind of leads on to a couple of other questions that I've scraped X for, and that's people sort of saying, if you want to justify a premium, you've got to have leverage, defend them NAV, all of this sort of stuff. And then more recently, in the last sort of 48 hours, people calling for fiat debt, so long dated fiat debt, like a corporate bond, 5-year corporate bond, pay 0 coupon, you pay the interest at the end when you pay it off. What are your thoughts on those sort of options?
Yeah. This is something that I've been exploring a little bit. Intellectually, I think that these conditions make a good setup for when you would want to, in theory, take on long dated fiat debt. The there's a lot of trade-offs that have to be balanced. And the reality is, like, we would prefer to do it with Smarter Convert. It's a better instrument, I think. And but we're open to that at the moment for a small bit. I think I disagree a little bit with some people seem to think that you need to have leverage in order to justify an MNAV over 1. But I think that only accounts for sort of a TradFi mentality, I think, of well, if you're 120% Bitcoin, then it makes sense for you to be a 1.2 MNAV. Yeah, I understand that, but the whole thing that we're focused on is delivering Bitcoin yield to shareholders, and we've proven that that's very doable. We've based our model off of Metaplanet's trajectory over the last year and a half. The key to their success has been issuing as much equity as they can at MNAV premiums and buying Bitcoin. And that has clearly worked, right? Like, that is what Metaplanet is built on. And I know it's harder to wrap your head around how is that MNAV justifiable, but then if you turn it back around and say, what would you be willing to pay for a company that if you're a Bitcoiner, what would you pay to own an asset that grows your Bitcoin at 10% a quarter? Right, like that's not 1x, right? That's something above. That's significantly above 1x, because you have to factor in how much you value 10% a quarter indefinitely into the future, and how you discount that back to the present. But like, the math there, depending on it, should be something like 5x MNAV. Like, that's a ridiculously productive asset, even if it's just 10% a quarter. And that's how I think about it, because I'm a Bitcoiner and I want more Bitcoin. And so, like, I see it that way. And I don't know why some people think that the only way it's justifiable is if you have leverage. Because, from my perspective, like, all I care about is growing. Is this an asset that grows my Bitcoin ownership over time? If so, then yes, I'm willing to pay a premium to own that asset. So some thoughts on on that particular point. I don't fully understand the perspective that you need leverage. I think leverage is prudent, especially when you're in these sort of compressed MNAV areas. For example, Metaplanet, I guess you could say, has averaged like 15% leverage over the last year and a half. I think that's a good spot to be. With Smarter Convert, we're single digit leverage, but even that's like extremely risk mitigated leverage because it's Bitcoin denominated. So some thoughts there. I think that we have room for a little more leverage if we get the right deal and the right terms. But I also don't think that it's like absolutely essential to the health and success and investment proposition of a Bitcoin treasury company.
And so this is kind of still going down the leverage route, but in a slightly different tack. Have you and Andrew considered perpetual corporate bonds instead of pref shares? So issuing to different people.
I'm actually not familiar with how those are structured and how they are perpetual. I guess I've seen some comments that that somebody's talking about experimenting with that. I forget which company.
H100, I think.
Okay. Yeah. So it would be, if and when they do that, I will read the hell out of those documents. But yeah, our plan still is to grow our balance sheet, keep accumulating Bitcoin in ways that deliver Bitcoin yield, and get to a scale where it makes sense to make strategy-like products to tap into the very attractive fixed income market in the UK. And TBD, what scale that is, what number of Bitcoin on the balance sheet unencumbered we need to have to be creditworthy, and for it to make sense to go through all the work to IPO those instruments, and then grow that market, because that's a strategy that's brand new in the US. They're having to educate the market and grow that market, and we'll have to do the same in the UK if and when we get to that point. Of course, it will help a lot that strategy has blazed that trail, and there's some precedent, and then there will be precedent from Metaplanet as well by that point, I think. So yeah, that's the big game. And Saylor designed those prefs because of the friction and downsides and pain points and limitations of traditional debt deals, and so for good reason, basically. And I think that's what we should continue to hope to graduate into. I will be very interested if H100 does something like this and it makes sense as like an intermediate term thing to do. We'll see.
So let's just hypothesize for a moment that Smarter Web gets to the point where they've got enough collateral, they launch their prefs. Saylor mentioned on a CNBC interview, I think it was, a couple of days ago, about growth opportunities for strategy, and one of them was to denominate his prefs in local currencies around the world, and he did mention the pound. So what does that do for Smarter Web in that scenario that they've got to that size?
Yeah, we'll see. He also mentioned the yen in that same sentence. And it may be that previously he had said that they've looked into offering launching their fixed income preferreds in Japan, and determined it didn't make sense. So I thought it was most interesting in that quote that he included the yen, and so that may mean that from their perspective, Stretch is a little different because it's targeting money market, it's targeting money, it's not targeting the fixed income market, and it may be that they have a path to roll those out internationally in an easier way than with the fixed income instruments. In which case, they may that might be their monopoly, right? Like that they could just dominate that globally, that particular slice of the global asset landscape, the money markets. We'll see if they can, and if they can do that, and they do that, and how it's received. So that'd be kind of worst case scenario, right? Is like, well, they just dominate with Stretch everywhere in the world. But then you're still talking about the fixed income market.
That's
just
right.
That's the money market, and it's big,
yeah.
But the fixed income market is way, way bigger. And that's especially true in the UK. I actually still need to do this analysis, and I will, of the size of the fixed income market in the UK specifically.
That was literally a later question.
Oh, that's funny. Yeah, I just have to sit down and do that. That's like kind of rabbit holes that'll take a whole day, and I'll come out with an answer. Um,
So I'm just bringing this up
yeah, that's helpful.
because, this is what we're talking about. To the people that haven't seen it, Jesse came up with this 2016, 2017, somewhere around there.
Oh, well, the very earliest versions of this was in 2020, but the first one that looks like this was 2023.
Okay. And obviously sailors use this, and people will likely recognize it from that. But the stretch is going after the money column, the
Yeah.
129 trillion dollars globally. And sorry.
Yeah, and specifically, obviously, stretch doesn't tap into all of money. Money there is M2 money globally. All currencies added up, and only a small subset of that would be like money market funds. A big chunk, but much. I don't know what percentage, but maybe it's 10, maybe it's 30% of
Sure.
that chunk, and that would be across all currencies globally. So yeah.
So yeah, I mean, my follow-up question, which you kind of answered maybe partially or fully, was are there plans to sort of do an iteration for this for the UK, but also maybe with a bit of granularity, because you're not working on a global scale, you're looking on a more sort of local scale of granularizing it to, I don't know, these are just areas that I'm thinking of, like pensions and ISAs and, so breaking bonds up, breaking money up, breaking, specifically for the UK market.
Yeah, that's the exercise I have to do. Basically, I want to make this for the UK. This chart. It is a good point that it would be helpful to take a look at the like sub buckets, the specific buckets, and I can do that. But part of where this analysis, this original view came from, is that there's a lot of numbers floating around out there about like how big the bond market is that are like a third this size, but those bond market numbers are like literally corporate bonds and sovereign debt bonds, and don't account for like other debt that is then repackaged into bonds. So that was part of where this came from, is realizing that when you look at a specific number for a specific label, it's often it's a subset of a bigger umbrella that is more relevant, right? So that would also, I would need to navigate like, okay, what's the full view in the UK, and then how much sits in SIPs and ISAs and all that. So getting that kind of granularity, that particular level of granularity might be tough, and we'll see. Basically, I need to figure out what I can track down.
Sure. And my thoughts on the sailor thing, which is maybe just my naturally sort of bullish take on things, is, he also said, I think it was in the interview with Bitcoin for Corporations that came out yesterday, I think it was, or day before, about, there's a local hero in each jurisdiction. They have significant advantages over international companies, whether that's down to local knowledge or tax advantages, or, he went into quite a long list. But so him going after a foreign market, to me, says that's part of the education piece. He's trying to help orange pill that local market, and then people turn around and buy the local version of it because it's local. There's advantages to owning it. Maybe it's a slightly higher percentage or whatever. What do you think to that?
Yeah. What I reacted with earlier was kind of the worst case scenario that I see from what he said. But the other reality that has been very clear is that he wants there to be a leading Bitcoin treasury company in every capital market in the world, because it's much better for strategy if they are not a monopoly globally. It's much better for Bitcoin if there is a robust global network of Bitcoin treasury companies that are specifically targeting their native jurisdiction and plugged in to be homegrown heroes and navigate TradFi in that specific capital market. That's a much better outcome for Saylor and for what he cares about, and also for strategy as a company. Like, in my analysis 4 months ago, where I put out like here's what I think might happen in the Bitcoin treasury company industry. I have strategies market share shrinking from like 90+% right now of the global Bitcoin treasury company landscape to 50%, right? But in the process, they become I think maybe they'll end up being a $70 trillion company 20 years from now. So the most valuable company in the world by a lot. And even though they lost market share along the way, like that's a really good outcome for them. And I think that's what he wants. And so the sort of optimistic take on what he was saying, that stretch, that they want to do stretch for the yen, for the British pound, for the euro. Maybe it's that they want to, and they help seed that kind of idea in that market, and they compete alongside the local heroes there.
Yeah, and the thought crossed my mind, if there's a currency and then one player ends up owning 95% of it because they just keep buying it, well, then it doesn't actually have any value anymore, because
Yeah, exactly.
no one's competing for it anymore. So getting the competition in there actually helps Bitcoin succeed and move to the next level.
Yeah. Like if strategy ends up accumulating, in my full potential of what's possible over the next 20 years, I think they could accumulate 25% of all Bitcoin. That's probably about the point of, I might even be beyond the point of diminishing returns, where it starts to be a problem that they own anything more than that, and hurts the overall value proposition of Bitcoin as a decentralized asset.
Sure.
So I think Saylor knows this. I don't think Saylor wants to have more than, I don't know what the number is in his head. I don't know if it's 25% or what, but I think that candidly he would admit, though he has a fiduciary obligation to not say this probably, but candidly he would admit that he doesn't want any more than X% of all Bitcoin, because that would be detrimental to Bitcoin.
And just carrying on the local hero bit, he said in his recent interview around the Bitcoin for Corporations one, each jurisdiction leader becoming like $1 trillion company.
Yeah.
Do you see that being smarter web, and do you think it would be that big?
Yeah. I've yet to watch that piece. He was on fire in New York, though, so his comments on stage were very insightful and in the same sort of direction as this. I think that the leading Bitcoin treasury company in any top 10 capital market will end up being the most valuable company in that capital market. And I think any top 10 capital market in the world will sustain or have capacity for a Bitcoin treasury company there, the leader, to accumulate 1% plus of all Bitcoin. And then I think it's only a matter of time for at what point in time is that 1% of all Bitcoin worth $1 trillion or more. And so I think that's that part in my mind is inevitable. And then the question is, who is the winner in each capital market? And Smarter Web is in pole position to keep being the leader and keep executing and grow into that meta planet kind of stage a year from now, maybe, and then strategy like, within a few years after that. At some point along the way, like it's probabilistic, I suppose. Like, what's our current probability of being that end state winner? And it's not 100%, but it's, I think, over 50%, right?
Sure.
Probably well over that. And then as we keep executing, that approaches 100%
Yeah.
as we keep going. That's part of what's interesting about the last 3 months is that, there were 25 Bitcoin treasury companies in the UK that popped up, and John in the community helped me. Like I was asking him for his numbers on one of the charts he put out, because I wanted to see how many still owned 0 Bitcoin. He's 14 still own 0 Bitcoin as of a week or two ago. And only a few have gotten over 100 Bitcoin. That's probably like 3 that have done that. We're at over 2,500 Bitcoin. The market caps. So I put out a tweet about this, but when I updated our slide deck recently to show us our market cap and then the market cap of the next 2 biggest Bitcoin treasury companies in the UK, those numbers from July 2nd, we had like a 3-4x lead, and as of mid-September, we had like a 10x lead over the next closest one. And I think over that. So in that way, the last 3 months has been tough on the share price for Smarter Web, but has been tougher on the smaller, fast following Bitcoin treasury companies in every capital market, I think, and certainly in the UK. And there's been a consolidation, I guess, of people consolidating to the leader in that capital market, and that's Smarter Web. So we've actually emerged at this point in time on a relative strength basis within the UK. We are stronger than we were 3 months ago, and that puts us in a great spot to have the benefit from the next wave of enthusiasm and capital inflows that I think we will disproportionately capture, and we will be that much closer to becoming the meta planet for the UK, and then eventually the strategy for the UK. And so it's not certain, but we're very much on that track. And I said sort of conservative numbers earlier. It's probably a fair bit higher, I think, probability wise, that we end up being that end state leader, that winner in the UK. And I think it's clear the scale of what that would mean if we do succeed.
So just to counter that, okay, so my life is spent on X and Twitter and no, that's the same thing. Telegram and Discord and communities and all that kind of stuff. And it definitely feels like 2 weeks ago was the gutter for sentiment. And, funnily enough, share price has basically traded in a 20p channel since, which is fantastic. I'm very happy with that. But that kind of leads to the next level of frustration to come out from people. And one of the things that's come up particularly today, based off October starting and Bitcoin's moving, MSTR obviously trades concurrently with Bitcoin due to its size and the number of investors. And Bitcoin's up 1%, MSTR's up 3 or whatever. So the frustration that's come out seemingly today is why isn't SWC moving? And what would you say to those investors?
These things don't move lockstep, first of all. So any one day snapshot with these high vol stocks isn't very instructive. I think I've been very heartened by taking a look at the price chart and sort of seeing the sort of looks like classic patterns of a sort of capitulation moment a week or two ago, high volume sell off, below a pound, and since then kind of stabilization and a reduced volume also, which and going sideways and it suddenly being kind of boring, which is a good thing really, because that's what you would want to see if you're starting to form a bottom. Part of that is, I think everybody expects like, okay, the bear market's over. Let's go back to the euphoria stage. But there's a lot of processing and pendulum swinging that has to happen between where we're at and if that happens again. So sideways is healthy at this point in time, given the last 3 months. Some Bitcoin treasury companies are not going sideways yet. They're still sort of looking for a bottom. And I feel grateful that we seem to be finding support. I think it's because investors globally are thinking, well, 1.3 mNAV is a hell of a buy that if they've delivered 278% Bitcoin yield in Q3. So like we'll see what happens this month and this quarter. I think if Smarter Web lags on any given day, it's not indicative of the health of it. Certainly not. Considering I think we're in this sort of post capitulation going sideways. It's boring. Why aren't we going up? That's what everybody feels during that stage of a market cycle. And if that's where we're at, then good, because we're that much closer to the fun part.
Yeah, and it's much like when you watch a pendulum, right? It's when it moves to the extreme of its movement, it kind of hangs, or appears to hang before it moves back. And
I'll say, related to this, I think about this stuff a lot because I'm a nerd. My least favorite day of the year is the fall equinox. And it's because I know that we are moving towards darkness at the fastest rate of any point all year, and that we've got 6 months ahead of above average darkness. So that's the worst day of the year, in my opinion. And the best day is the spring equinox, because you're moving towards summer, and in the reverse, you're above average length of day for 6 months ahead. So pendulums, that's a pendulum swinging. That's what happens with sentiment in markets for assets like this that are monetizing quickly. Things are moving fast, and there's a lot of emotion, volatility. When there's high volatility, it manifests as a lot of price action happening in a short space of time. And we've seen that with Metaplanet over the year and a half, 4 cycles of this, even though this cycle does seem to be more distinct, probably because of the alignment of all of these companies globally at this moment, and in part because of the sort of hedge fund trade. But yeah, it takes time for the pendulum to swing back, and you can celebrate that moment in time where it appears to be stopped, but the direction, the vector has suddenly flipped, from one way to the other way, and even though nothing has really changed, like it's a really good sign of what's to come.
Yeah, and I often think of it a bit like it's almost like it's trying to bore out the last few people, make them so bored,
Yes,
that they capitulate, and then we move. Also, a little mental health aside is the autumn equinox. There's a massive peak in mental instability.
Is that right?
At that time of year, because light is the number of hours of daylight are changing at the fastest rate at that point. which screws with people's heads. That's
I feel it physiologically, the sort of seasonal effect of like, um, I start to crave sweets, things like that, where it's like hibernation time.
getting ready for winter. Nice. Okay, so this week's news was the new non-executive director, Randall Casson. Is that how
Yes,
you pronounce his name? Casson?
I think so. I actually don't know.
Tell us a bit more about that.
Yeah.
Uh,
Yeah. We know that it's important. It's a vital part of having a strong company is to have strong governance, and especially where we're looking to go, that's mandatory. Is to have strong governance and non-executive directors in particular. And so we've been in the process of looking for suitable non-executive directors with the kind of experience that we want to add to the company, based on our aspirations and ambitions. And Randall's a perfect fit for that. He's been a non-executive director at a FTSE 100 company for a number of years now, and had a very long career as an audit partner for a Big Four firm, which is just a great bit of expertise and connections too that will be helpful to the company, as we continue to level up into the big leagues, hopefully.
and it's not just a FTSE 100 company, though, is it? Because it's also one of the UK's very few success stories over sort of more recent years.
Yeah, and innovative story too, which is what probably part of why Randall is excited about and comfortable with what we aspire to do is he's got an openness to innovation and in the UK, and that's what we're trying to do.
Awesome. And then following on from that, is there any other kind of ongoing recruitment?
I can't speak about it, but yeah.
Okay, awesome. I mean, that was a leading question, so I'll give you that. If one day SWC did uplist to the LSE, are shorts a concern? And is there anything that like a company can actually do about that? Or is it just markets being markets and we just suck it up?
Yeah, it becomes, I guess that it is easier to short on LSE than it is on Aquis. It is currently possible to short, through OTC in particular. So it's not like it's not possible to short our stock currently. And then I think the reality is you have to have a strong company and you have to execute, and shorts only, it's expensive to short. You have to borrow at expensive rates, and you need to have a targeted thesis and a defined time period for it to play out on. And I think that's part of why like this sort of Jim Chanos trade has ended up working is it became popular, and it became a timeline that made sense to borrow at high rates for. And yeah, so like we're not worried about shorts. We know that it will happen, but one of the good things about shorts is that there are, so long as you keep accumulating Bitcoin, they are buyers at some point.
Yeah, for sure. I mean, I kind of look at it as they play a specific maybe perceived weakness in the market, i.e. euphoria. they can spot it, they play it, they squeeze the juice, and then they move on to whatever the next
Yeah.
mini thing
Yeah.
is.
I would add that like a healthy company is not inherently anti-fragile, but a healthy company gets stronger through stress tests, right? And any financial asset, any traded company, let's say, um, goes through stress in the market. There are sharks that will opportunistically try things, and um, we've certainly seen it with Bitcoin, how it has matured over time, and um, all sorts of financial derivatives and mechanisms have been developed that are individuals finding ways to make profit off of Bitcoin market movements that collectively amount to Bitcoin becoming more anti-fragile as an asset. And I think that's what any strong company the gauntlet that any strong company has to go through is like, can you withstand stress because your fundamentals are sound? And then as you do withstand stress, the stock and the entire market apparatus around it gets stronger, because you learn from the stress and you develop new mechanics, or even just the investor base becomes more accustomed to, oh, okay, there's a short attack, but we've survived this before, so we're not going to panic. That all those things happen, I think, with any growing company. And the thing that matters at the end of the day is like, are your fundamentals sound, and is the company, growing in value over time? And we are very confident that our model and the infrastructure we have in place sets us on the path to do that.
Awesome. And then another sort of sentiment-based thing that's come up again in the last 48 hours, I think because it's got boring, people are kind of coming out of the woodwork with some different takes. What do you say to people that are comparing treasuries, and I'm guessing including SWC, to Bitcoin miners, in that, miners kind of perform well to start with, and then they massively underperformed, and then they've had to pivot to kind of bring back their relevance?
Yeah, that's very interesting. I haven't come across that, but I have some immediate thoughts. The mining. So yes, in the sense that Bitcoin treasury companies and Bitcoin miners are both trying to mine Bitcoin. Like I do like that sort of meme that the community has grabbed onto. Yeah, we're trying to, but the way in which we go about it is very different, right? Obviously, mining blocks is a very different business from what we're doing, which is trying to use capital market tools to accumulate Bitcoin for the benefit of the company, meaning its shareholders. And the reason that I'm in this business is because I think that this is the way more efficient way to mine Bitcoin in 2025 than competing in the absolutely brutal capex heavy, just crushing economic competitive landscape that is global Bitcoin mining. Yeah, if like I don't know this to be true, but makes sense if like miners, when they first pop onto the scene, they perform well and then they slowly get crushed. That would make sense. That would line up with the reality of their, the capex heavy nature of the business. And it's really hard to have a current fleet of miners deployed constantly, right? So like when you first come on the scene, you have the most efficient machines that make you the most profitable, and then that goes away real fast because of innovation and the next generation of machines coming along, 6 months later.
And the depreciation on that as well.
Yeah, and so the economics on it it's just absolutely crushing. So it's not surprising then that that a mining company is most efficient when they first make their investments in upfront, and then they struggle. It's just such a hard business, and this is kind of the opposite, where it's hardest at the beginning to raise capital. It's hardest at the beginning to get trading volume, to generate interest in the stock, to attract investors. Because how are you differentiated? You're not at the beginning. And then as you get some scale, you become differentiated. You start to have these things that are important. Scale, trading volume, uh, investors that are excited about the company, and spread the word about the company too. And yeah, so these mechanics are the opposite sort of dynamic, I think. Of course, I think people sort of sounds like people are connecting, trying to draw parallels between the shape of our stock chart over the last 5 months and what they've seen with, if you zoom out on a miner over 4 years or something like that. I think, a better analog would be go look at Metaplanet last summer, and see how they had a wave of growth and excessive excitement, and then a painful, very painful pullback, and then a period of boring, and then now that looks like a speck on the chart.
Yeah.
What felt like an insane mini bubble back then is now a tiny little thing at the base of their chart, because they've grown so much since. And now they have a different mini bubble that they're going through now, and we're all going through now. The important part is that the NAV for each Bitcoin treasury company keeps going up, and sort of sets that metaphorical floor for the value of the business. And so long as you keep adding to that, it's very different from a Bitcoin mining company whose valuation is the expectation of future profits. Whereas, the valuation of a Bitcoin treasury company is how many Bitcoin does it hold?
And I think,
and that keeps going up.
the MSTR chart is starting to look a lot like the Bitcoin chart, right? As in that sort of go up, come back down again, but new floor, go up.
Yeah, and people forget that that's what a monetizing asset looks like, right? Like, you don't go up in a straight line. You go up in a line where human psychology layers on little mini bubbles along the way. And I've wrote a few articles about this phenomenon, and how Bitcoin is that it's a series of bubbles where the conditions. The thing, like a classic bubble, like a tulip mania bubble, or whatever. There's nothing that changes that prevents you from going back to the prior conditions. And so you round trip it, right? You go all the way back. But with Bitcoin, it keeps getting better as an asset. It keeps getting more adopted. So the amount being mined every day drops, once every 4 years. So you don't go back to the conditions that existed before the bubble began. And what that means is you set a new floor, right? So you have a series of mini bubbles, with each one with a higher floor. And that's been the story of Bitcoin monetizing for 16 years. And I see the same sort of psychology layering on top of fundamentals with Bitcoin treasury companies. That's part of why I'm excited about like what Metaplanet has done, and the volatility there has manifested as compressing 4-year Bitcoin cycles into 4 months and doing it all again. And I think that's based on that reality of you set a higher floor because they hold more Bitcoin than they did before that cycle, and then they keep adding during the boring period, which is maybe where we're at right now with Smarter Web. And eventually that floor forces price discovery to the upside again.
Yeah, and just looking at Smarter Web 5 months ago, 2.5p at IPO with a NAV per share of basically nothing.
Yep.
To now, I think as of today, about 80p in fiat terms, NAV per share, the floor has gone up. So yes, it's gone up and come back down again, but the baseline is higher now. And
That's
then
right. That's a great way to summarize it into reality of this cycle for Smarter Web. Before and after. Floor was 0. Floor is now 80p. That's right.
And then just one last question for you before I let you go, because I know we're on the hour. It was kind of let out of the bag, rumors of you moving to the UK. What's the situation on that?
Yeah. So I didn't intend for that to be known, but I didn't say that should not be known. So yeah, that's been kind of the penciled in intention, probably in the spring. But I don't want, it's very much uncertain. Based on I've got a growing family and we'll see, right? But the current sort of most probably, I don't know how to frame it, is it's somewhere between probably and most likely.
Okay.
Would be moving to probably London in the spring. So we'll see, but don't count on it, everybody, because it's possible it won't happen.
That would be awesome, and I'd love to buy you a beer or a coffee if that happens.
I will certainly be in London, for trips going forward. So, and that may just be permanent in the spring. We'll see.
Awesome. Finally, just a quick shout out to the community. Thank you everyone for everything that you're posting, questions that you're asking. Even if they're bearish, it's good to have the debate and get those questions answered. And like, subscribe, do all that kind of good stuff. Not for my benefit, but to get Smarter Web out further to more people. That's the point. Let's orange pill the UK.
Yeah, we're very close to 4,500 in the community, which is really cool. It'll be a huge landmark when we hit 5,000, probably this month, possibly this month. That'd be really cool.
Yeah, I think if Q4 does what Q4 does, then I think that'll help. But yeah, everyone keep sharing, pushing it. Talk to your friends, family, all that kind of stuff. And thank you very much. Thank you, Jesse. And
yeah, thank you, James.
until next time.
Sounds good.